So what's a real deal to you at the 10% upside?
Yeah, I think the real deal might not be as easy to achieve, but that's basically everything. So it's rolling back tariffs from last year, which have actually shaved a couple of percentage points off of earnings growth. It would be open access to China markets. It would be some kind of resolution on intellectual property, the protection and enforcement of the protection of intellectual property. So it's kind of the whole gamut of issues. And, you know, again, I think the most likely scenario is positive in that they don't double the tariffs from last year, but I don't necessarily see them rolling back the 2018 tariffs. And I think that's increasingly priced into the market.
Well, fair point, because we talked to David Bahnsen of the Bahnsen Group earlier, and he mentioned that the one thing that's not priced in is rolling back those tariffs. Here's what he had to say.
No one's expecting the tariffs to come backwards.
True.
Now, and I don't believe they will, but that's something markets have certainly not priced in. What if they actually undo last year's tariff increases? That's something I think could be very bullish.
Okay.
Yeah, I would agree. I mean, really, if you look at the earnings impact from the tariffs last year, that was a full almost 2 percentage points of earnings. So, I mean, that would be a huge deal. And then if you look at the multiple expansion, or sorry, multiple compression in areas of the market that are most hit by those tariffs, we've seen the S&P multiple compressed by almost 8 percentage points. And we've seen those areas like China exposed stocks with lots of imports coming from overseas, those sectors have seen massive multiple compression. So I think that undoing that would be very positive.
Marty, we don't want to see the markets get ahead of themselves on this. And as a practical matter, if you're really talking about a real deal, as Savita says, on those issues, we can put up the 5 sort of issues that Bloomberg's reported there might be memorandum of understanding on. Those are some pretty fundamental things. I've seen trade talks take years, not months or weeks.
Yeah, no one's suggesting that Donald Trump is going to negotiate the fine details of intellectual property transfers today. But if there's a broad agreement that these issues will be addressed, they can take as much time as they want. They can declare victory. One thing people aren't thinking about, and they should, is that if this China thing gets resolved, then you got to think about Europe and car tariffs. And those are still on the table, and Europe, which is already weak, could really be in trouble on that one.
Well, I love that you brought that up, Marty, because Gina Martin Adams of Bloomberg Intelligence has been talking about just that you look at U.S. stocks with exposure to China and earnings expectations, that war has in some ways been factored in, but not when it comes to U.S. versus Europe. Do you agree with that assessment?
I do, yeah. I mean, I think that if you look at stocks exposed to China, you've seen earnings cuts of, I think, almost
I can bring that chart up
for you. Yeah,
if you come inside the Bloomberg, you can see that. It's the white line is where we are with those companies, and the blue line is estimates.
Yeah, so I mean, if you look at multinationals overall, and in particular, you know, retailers with exposure to Europe, autos with exposure to Europe, you haven't necessarily seen as strong a downward revision. And then on top of that, in March 29th, you have Brexit, which is another kind of big binary potential negative. So I think that a lot of the European strife hasn't necessarily been focused in. I mean, it's interesting because I feel like the market can only focus on one issue at a time. And right now it's trade. So maybe once we get past March 1st, we'll move on to the Fed, Brexit,
it's like,
you know, all the other, exactly.
Before we do that, let's talk about this European strife. Is it European strife or German strife specifically? That's the entity that really seems to be hurting the most. And we saw the Austrian chancellor this week meet with President Trump, and he came away saying, by the way, President Trump has got a thing for Germany. What is the thing that President Trump has with Angela Merkel in Germany?
Well, he just, you know, it basically is as simple as going out on Pennsylvania Avenue and seeing all the BMWs. He really reacts very badly to that. And even though many of them are built in the U.S., he still thinks that Germany is taking advantage of the U.S.
So then, Savita, no matter what, are we going to be looking at buy the rumor, sell the news for any kind of these things? Because even if Europe talks get better and we start to hear more conciliatory language, it's still going to be a buy the rumor, sell the news?
I mean, I think if we don't get the real deal, which I think is pretty tough to achieve, I would sell on March 1st, because I think that, you know, what's priced into the market at this point is actually a fairly good resolution. I think it's essentially no new tariffs, but not a full resolution on all of the issues. So, you know, I mean, the market's already moved pretty quickly, so I think the knee-jerk reaction might be a downward.
This has been relatively rosy so far. Take the other side of it. Suppose this does not go well today in the Oval Office, and the president says, you know what, we're not only going to keep the 10% tariffs, we're going to up the tariffs. We're going to 25% and maybe look at some other goods too.
Yeah.
What does the market do if that happens?
So I think in that scenario, you could see a 5 to 10% downward move. And again, thinking about the earnings hit, it's another 2% hit to earnings, multiple compression. I mean, we've already seen companies stall out on CapEx. They've already stopped a lot of the programs that they had in place. I mean, the downward revisions to CapEx this year have been pretty sizable. And I think if those increase and if you start to see consumer and corporate confidence wane, that could be as much as 10% downside to the S&P.
Oh, okay.
And that's just the immediate reaction. That's not to say what happens over the longer term.